Finally, a major research house has come out and revealed the extent of our housing crisis and why the supply shortages we have in multiple areas around the country are about to get worse over the next 5 years. So today, I'm going to go through exactly what they have to say. I'm going to dive into the data, and then I'm going to share the scary impact this will have on property prices to anyone thinking of buying a property not just now, but at any time over the next 5 years. Let's dive in. Hello, it's Nero here, and if you're new to my channel, hit that subscribe button because I talk about all things related to the Australian property market and the economy. 250,000 shortfall, housing target unlikely to be met. The federal government will fall 260,000 homes short of its 1.2 million target by the end of the decade, with warnings the nation faces chronic housing affordability problems that will weigh on younger generations for years. New forecasts from Oxford Economics released on Monday show that despite the housing construction market enjoying a pickup from next year as the Reserve Bank starts to cut official interest rates, the government will miss its ambitious home target by more than 20%. Now, I'm not sure if you caught it, but there were two important insights in that statement from Oxford Economics. Number one, they fully expect interest rates to start falling next year. This will increase people's borrowing capacities and then place increased demand on the property market. And secondly, even though, yes, property approvals might be improving, yes, construction numbers might be increasing, we are still going to fall very short of the number of properties we need in Australia. The government has announced more than $30 billion in housing policy, including an extra billion to the states to fast-track infrastructure such as sewers and roads, $9.3 billion for more social housing, and its $10 billion Housing Australia Future Fund. It sounds like a lot of money, but according to Oxford's Head of Property and Building Forecasting, Timothy Hibbert, that won't be enough for the government to hit its long-term target. And when we look at this next chart, which tracks residential commencements in Australia, Hibbert says the total house and apartment starts are on track to fall to just 155,700 this year, the lowest number since 2013, when the nation was home to 23 million. Today, the population has reached 27 million. So that means we're building fewer homes right now, and yet we have more people living in this country. High interest rates and high building costs, which had led to the fall in housing starts, would eventually be turned around, Oxford forecasting a record 241,900 starts by mid-2029. Now, why is that number important? Well, the federal government's target is to build 1.2 million homes over 5 years, which makes it an average of 240,000 homes per year. Yet, as you just saw, we're only building about 155,000, and it's going to take us 5 years until we get to that annual average of about 240,000. So this housing shortage isn't going away anytime soon. Hibbert said construction would start to rise next year as a combination of federal and state government programs, lower interest rates, and fewer labour shortages enabled builders to get work underway. He said, despite that increase, the shortage of housing would weigh on property prices and entrench affordability issues. So what he's saying is the housing shortage will continue to drive property prices higher across the country. Now, of course, you might be skeptical when I say this because the Australian economy is struggling. GDP growth is at 0.1%. Unemployment is starting to rise, but it's currently sitting at 4.1%. When you look at this chart, you can see that unemployment has generally sat at 5% or above in Australia, and during those times, property prices have continued to rise. So we're at record low levels when it comes to unemployment. So yes, I do expect unemployment to rise. Yes, that means that some people will struggle, but the fact is that when we don't have enough properties in Australia right now. We're not building enough properties. What that means is that even though some people will struggle, some people may have to sell their property when they really don't want to, there will be more than likely multiple buyers on each property, which will keep property prices rising. In many areas around the country, our buyers agency is finding that we're instead looking to see how can we get property for less than what others are willing to pay, because there are multiple buyers on almost every property that we're looking to buy for clients. So we are seeing that demand continue in multiple areas throughout the country. And even with interest rates, yes, they're at the highest they've been at for 12 years. Yes, there is talk about interest rates potentially rising in the short term, but as you saw earlier on, Oxford Economics fully expects that interest rates will start to fall from next year, as I do as well, because we can see here that inflation is falling. As I said before, GDP growth is falling as well. We're at nearly zero, and if we start to go negative, that means that Australia goes into a recession. That's something the Reserve Bank really wants to avoid. So there are multiple reasons why property prices are likely to rise, but that doesn't mean they're going to rise everywhere. You can't just buy blindly. Anyone who tells you just buy property anywhere and you're going to do well is steering you down the wrong path, because the government is trying to build more properties and they're going to overcorrect in certain locations. For example, in New South Wales, the state government has identified multiple areas where they plan on rezoning land to increase density and increase supply. Now, in those areas, capital growth will be compromised, because those areas could be at risk of potential oversupply as they really increase the number of properties being built. So you do need to do your due diligence. You can't just say I'm going to buy, say, in Sydney or in Perth or a large regional centre and I'm going to do okay. You need to look at things first from a macro level. Yes, there is a housing shortage in Australia, but then drill down to a micro level to ensure that you don't inadvertently buy in an area that is at risk of oversupply. So although in the short term, housing growth rates will go up and down, you will see headlines like this talking about how housing growth rates will slow down due to affordability. That's only because of where interest rates are right now. When interest rates start to fall, we'll see those rates of growth increasing. But regardless of that, property prices are set to keep rising. The only question is how much, and then where are the best places to buy. But don't be put off by these headlines that talk about the rate of growth easing. What it still means is that as expensive as property prices are right now in Australia, in multiple areas, this is the cheapest they're ever going to be. And over the next 5 years, you're going to see property prices get more and more expensive, driven by these supply shortages. So if you're someone who's trying to work out, should you buy now, should you wait, the data shows that if you wait, the likelihood is that you will fall further behind as prices start to increase. But if you want to know, well, where are the best places to buy? How do you know which areas to avoid? Check out the link in the description below to get totally for free the digital version and audio version of my book. Otherwise, I'll see you next time.